Good morning, team. Thank you so much for joining us. It is Tuesday, April 26th. I'm Amy Kaur, and I'm joined by Kevin Van Eck, and we are live out of the Goose Island office. We are really excited because we've got a great guest joining us this morning. So please grab your cup of coffee, your cup of tea, whatever you are getting your day started with this morning, and let's jump into the next episode of Coffee with Amy and Kevin.
Yes, good morning, everyone. Good morning, Amy. Thank you again for joining us. Yes, our special guest today is Ryan Iwanaga. He is the co-founder and chief experience officer at Sereno on the West Coast, and now Christie's International Real Estate Sereno. So welcome, Ryan. It's great to have you.
Yeah, thanks so much for having me. It's quite an honor to actually just be sitting with you, so I appreciate being here.
Yeah, Ryan, I am excited because you are in Northern California, which many people know is my original neck of the woods. For some crazy reason, 25 years ago, I decided to move to the Midwest, but was really excited to hear when we were affiliating with Sereno. So super excited.
Yeah, thank you so much. It's been awesome. Just the experience of the last couple of months has been tremendous. We've been grateful for the process, and we can't thank the team enough just for making the experience great. So thank you.
Awesome. All right, well,
California hasn't been the same since you left.
Oh, thank you. Well, I'm back often, which I enjoy. At least my family enjoys. All right, so before we jump into some really great questions that we want to ask you about the market in California, we want to learn a little bit about you, kind of how you got into real estate, your experience now as Chief Experience Officer. I keep wanting to say Chief Excitement Officer. So Chief Experience Officer, either way it works. But tell us a little bit about your career in real estate. Tell us how you got started and how you are now here.
Yeah, it's so interesting. You know, in preparing for today's, just with our chat for today's chat, what I realized is actually this is my 25th year in the business. I got into the business in 1997. And you know, just like everybody else who enters real estate as a second or third career, I've kind of got an interesting background. I was actually working on my doctorate in English and creative writing. Long story short, my daughter was born, and I just had a moment of clarity and realized I wasn't a very good academic. I wasn't a very good scholar. And really, you know, my sole purpose was to come back to California and just get into real estate and try to create a good life for my family. And so, you know, it's interesting because that background of kind of living in a creative space and more of an academic environment, I think really strangely has helped inform me as both a realtor and a manager and a founder of a company. I think if you ask my fellow co-founder, Chris Chapney, whether I'm a businessman or not, he'd probably laugh because I'm not. I can get my way through a profit and loss statement and all of those things, but that's not really what excites me. And so basically sold real estate for a few years. Chris and I actually just by coincidence and chance and the stars aligning, we stumbled into leadership, starting off in office management. And then basically in 2006, we decided to step away from. Chris was the president of a large large big box brokerage, and I was the manager of one of the top offices. And we just decided to step away and do our own thing. And you know, it's been a great experience ever since. We founded a Sereno Group in 2006, and 16 years later, here we are.
Well, it's been, I can't tell you, Ryan, over the last several months, getting to know you and Chris has been, this is an overused word, great, like truly amazing, because the two of you together obviously are a powerhouse.
Yeah, I think, that's so great. And it kind of segues into, kind of even where we're going today and having the opportunity to interview you, at Properties being a local company here, but now having access to our affiliates, right? And so what we really kind of want to dive into is, we all know what happened 2 years ago with COVID, right? And for many markets, including ours in Chicagoland, it created a huge shift in our market dynamics. We went from a pretty modest and, even paced market to now something that is very fast, and obviously there's very low inventory, and it's a really big and challenging time for buyers who are purchasing. But we wanted to talk with you because I know, being in Northern California, you've seen that type of a market for many years, probably for at least 10 years. And so we wanted to kind of dive into your experience, having been in a market like this a little bit longer, to share with our agents some of the things that you're seeing and some of the, things that your agents are doing. So the first thing that I really kind of want to hit on is, what are some of the best strategies you are seeing buyers agents putting into place in California, in your market, to make their offers more competitive when they're up against multiple offers? Is there anything that you see that, is valuable or is a game changer?
Yeah, first of all, it's interesting. The last couple of years have been incredibly surreal, right? That in 2020, in March of 2020, real estate is always the first thing that corrects on bad news, right? Mm-hmm. And really, especially here in Silicon Valley, our highs are high and our lows are low, right? And we've been fortunate to be part of a very robust market for quite some time. But I'm not sure how Illinois did it, but for us on March, I think it was March 16th or 15th of 2020. The whole state shut down. We went to shelter in place, and really, it was Chris and I think we were kind of we had a little PTSD from 2008, when during the great economic crisis, and really, and we benefited from that really trying time, in that we became very smart on how to run the business. And so the first thing that we did when the shelter in place was put in, was announced, was we kind of hunkered down and tried to figure out, okay, how are we going to make it through, right? We've got to anticipate that there's going to be, maybe perhaps 3-4 months of no business at all. And so we just started, we started running the business with that in mind. And really remarkably, like 2 or 3 weeks into shelter in place, all of a sudden we were, offers were being accepted, and agents were being very resourceful in making sure that they were responsible to the shelter in place, but also, working in the environment and the restrictions that were laid out. And, there was a short period of time where, there was questions about the business, but then all of a sudden, 3-4 months later, it was crazy, and super unique to kind of go through that while being kind of sheltered in place, but also kind of dealing with this incredibly robust market. It was something that we had never expected. But going back to kind of your question of, what I think it's interesting in kind of preparing for the interview, I think our very best realtors, and I hate to be cliche, or I don't really have any kind of new thing, but really, in looking at it, our most successful people are always great communicators, right? And I think that, as crazy as it is, the process, especially now, where and we'll talk about the market and where it's at, but the past market that we've been in for the last couple of years is, the property's listed, and then you line up with 20, 30 other people, and you put your best foot forward. And really, I think what we try to stress with our people is that you want to be a proactive communicator, right? You want to be the person that is representing your client as best as possible, regardless of whether you have a 1 in 30 chance, right? That you should actually continue to practice a high level of real estate practice every single opportunity that you have. And so along with that is communication, not only with your clients, but with the seller. If you're making an appointment to view the property, follow through on that. With the listing agent, make sure that you're communicating with them as much as possible. And I know escrows are done differently in Illinois and the Midwest, but here the agents run the escrow. So they're involved from the day that they get under contract to the close. They're managing all the points of the escrow, inspections, disclosure review, all of those things. And so there really is kind of an opportunity to be very active in the process. And I think what happens in a market like this, two things happen: is listing agents get kind of lazy, where they check all the boxes, but they just sort of sit back and wait, right? And then buyer's agents, they kind of either buy into this whole idea that, maybe their chances aren't great, or, they'll do the bare minimum. They'll write the contract, they'll get the disclosures, they'll send the contract in and just wait for the response. And I think that what we find is that the most communicative and the most active realtors are oftentimes the most successful. And it's not a one for one. Like, the way that I view real estate, it's part of a karmic universe, right? That the effort that you put in, if you're always giving your very best effort, you might not actually be successful in that one effort, but it all eventually adds up and it creates opportunity for you down the road, right? And so because of the craziness of the market, it doesn't mean that you should behave any differently. You should depend upon the communication and the relationship building, because you might develop and this happened to me as an agent, and I learned this from Chris, is that you might not be successful in that one negotiation or whatever, but the relationship that you build will come back and it will serve to benefit you and your client eventually, right? And regardless of how tight or restricted or active the market is, you should always kind of depend upon those fundamentals. So I don't know if there's any, it's more depending upon the fundamentals. Like, as crazy as stuff gets, like, I think the people that actually try to figure out like the silver bullet and try to figure out like the new angle to things, and they get away from the fundamentals, those are the people that are always going to kind of be reinventing the wheel on a daily basis. And if you look at the consistency of the top producers in the marketplace, the one element that they all share is that they're relationship builders and they're good communicators. And so those are the things that I think actually benefit buyers. So.
Thank you. Yeah, it's interesting because the three of us have talked about how we complicate everything. We make things more difficult than they need to be. So getting back to the basics and the fundamentals is a differentiator.
So I do want to talk a little bit about inventory. It's very low across the board. You had said you're down below, I think, a month's supply of inventory. You're probably looking at things in weeks in some instances, in some markets. So let me ask you this. When listing a home in the Bay Area, do most agents try to sell it as a pocket listing or prior to going to market? Or would you say that the majority are really bringing properties to the MLS? I'm kind of curious to see what you're seeing in your different markets.
Yeah, that's changed over time, and certainly with clear cooperation, it's kind of changed how that happens. And really, there were certain marketplaces where over 70% of the transactions that were done were basically off market, and that was a result of the 2008, coming out of 2008, 2009. A lot of the high end clientele, I think, really didn't want to stigmatize their properties with days on market, right? And so, in those really kind of intimate, smaller marketplaces where it was a high price point, agents started networking and basically, keeping the property off of the days on market kind of conundrum, right? And so really what was found is that there was a kind of off market that was taking place. And I think in and of itself, that still happens in certain marketplaces, but it's not as prevalent. And it's because of the fact that I think people are trying to adhere to a clear cooperation and it just, I think just, the market that we were coming out of in 2008, 2009 compared to the market that we are in now, right? Two completely different marketplaces. And so it does serve the benefit of leveraging the property out on the MLS as much as possible. And so I think, yes, off market does happen from time to time. There's the property, the listing sign, and the property's in preparation stages, and they get a preemptive offer, which happens quite often, right? Where an agent will set, and I don't know how they do it in Illinois, but basically what will happen is an agent will set an offer date to be a week later. So they have time to have an open house, have broker tour and whatever, and then they set an offer date in the, week after it's been listed. And sometimes what will happen is an agent will come in with a preemptive offer. And it's really, oftentimes it's an offer that, is super aggressive and really pushing, the price point. And they try to just basically motivate the seller not to wait, right? And it's just really, it comes down to what the seller really wants. But that's kind of what happens. That's what's been happening more than off market, I think.
Understood. And I think that's really important to remember. It's that last phrase you said, which is it comes down to what the client wants, right? They're the ones making the decision. So let's get your 60-second prediction here. Interest rates, they're going up. What's going to happen? Sure. So let's get your 60-second prediction here. Interest rates, they're going up. What's going to happen?
Here in Silicon Valley in the Bay Area, it's interesting because we have a tremendous amount of liquidity in the marketplace. We have, because high tech and all of the things that go on in that sector, we have a very, very large number of people who are financially sophisticated. And so they're a little bit insulated from interest rates, right? Mm-hmm. Having said that, I think, all of the stuff that's going on, high gas prices, inflation, rising, interest rates and all of those things, they could serve to temper the market just a little bit. In fact, we've seen just a little bit of a kind of a slowdown. But having said that, the properties that are in prime location, that are presented well, that are kind of newer or are new construction, those properties are still going to be very popular and very desirable. And so we, over the last 2 years, we've seen, the Bay Area real estate has always been about appreciation. We've seen incredible appreciation over the course of my career. But in particular, the last 2 years, it's like nothing that we've ever seen. And so we kind of expect that to continue. It might not be at the pace that has been the market, but we anticipate that, those properties that are in the right location, presented well, have all the bells and whistles, I think that those will continue to be very, very sought after. Now, again, what also affects our marketplace is it's just a simple supply and demand issue where, we're hovering right around 1 month of supply. And so historically, Bay Area real estate is at equilibrium when there's anywhere from 5 to 6 months of inventory supply. And so we've hovered around the month, the 2 months, to 3 months. We've never really gotten close to that. Maybe after 2009, of course, we were far exceeding that, but it's been a slow decline over that time. And we've hovered at, 1 month for probably a couple of years now. Right. And, Amy, asking your earlier question about fatigue, in talking with agents in January and February this year, they just said, well, January and February, it's just an extension of 2021. Like, that's what it felt like. Like there are agents who are working during the holiday months, like during, I think we put a property under contract, or a few properties under contract on Christmas Eve.
Yeah.
And typically, when I say typically, it hasn't been typical, but back in my day, way back when, right? The months of the end of November through December, that was when the time when everybody kind of recouped, right? And we're in recovery mode and setting up for the first quarter of the following year. And really what it's felt like over the last couple of years, it's just a continuation. Like it's just 2020 kind of continued into 2022, and there's been no kind of rest.
Yeah.
Right.
And that fatigue part is really, that's something that I focus on as the whatever chief experience officer is. Oftentimes in our business, like our own well-being, like taking care of ourselves, that's the last priority on the whole list of things, right?
Yeah.
We have to be available to our clients. We have to do, it's right now, like everything is right now. And so oftentimes agents are the last, they're serving others but themselves, right? And I think for me, I've been trying to focus on making sure that agents are checking in with themselves, right? That they're spending time kind of taking care of themselves, because oftentimes that's really not something that happens in our business. And I think going back, talking about, what your agent should do is making sure that they're checking in with themselves, making sure that they're taking time and breathing, like taking a moment to take 3 deep breaths and relax and try to be mindful. Right. Because I think burnout
it's real, right? I mean, it's happening for people. It's not a
matter of if, it's just a matter of when.
Yeah.
Mm-hmm. And any realtor who's really committed to the business, that it's just a matter of when that's going to happen. And so self-management is a key component. And it's not, it's not because like you deserve a hug kind of thing, right? Which we all do, but it's about sustainability. It's about being able to serve your clients at the highest level. If you're kind of running on empty and you're running on adrenaline and that's all you're running on, and you're not taking care of yourself, eventually something's going to break, right? And I think that in and of itself is probably the biggest challenge in our market, is making sure that agents can actually sustain that pace that's out there. And part of that is making sure that you take care of yourself.
Well, yeah. And it's always that fear that the deals are going to slow down or the market's going to slow. So I think, telling agents to put their oxygen mask on first, as they tell you on the airplane, is always very critical. So that being said, I want to wrap up with this question. Where do you see the biggest opportunity in your market, or just in the market in general, I guess, in the next 12 to 24 months? I mean, I guess the sense is we're not slowing down, but what opportunity do you see?
I think I see tremendous opportunity, right? I mean, I think we're very, very kind of bullish on, is it bullish? Yeah. I don't know. As stupid as I am, I don't know any of those. But I think we're very, very, optimistic about the market moving forward. I think our area still remains really desirable, right? One of the interesting things that were a result of the pandemic is the whole idea of lifestyle and really the priority that took and how people are thinking about where they're living and purchasing, right? A lot of that has been spread out because people are now, thinking about making that the priority. And it's ironic because you would think that would be the priority, but really in the pace of where we're at, oftentimes it's, a component that's really been driving decisions in the past has been the convenience of commute. Like, I want to be, how long is it going to take me to get to work every day? And so what happened with the pandemic is a lot of that spread out, and people all of a sudden were thinking, okay, well, what does my life mean to me, and how can I make it meaningful, right? And so a lot of those concentrated markets, those people began to spread out, and that's kind of what we've seen in a lot of our, throughout the Bay Area, is that people are now trying to live where they can kind of participate and be present in kind of their life, because we're always working, right? And so we kind of feel like that's going to be the continuing trend. And really, I think we see that's it. I don't think that we're going to see a drastic change in that, right? And we'll probably have some correction, but if there is a correction, in my mind, that's a benefit, because the opportunity, there's a lot of first-time home buyers out there. There's a lot of people that don't have that connection to tech wealth and all of that right now aren't being served in this marketplace. In fact, they're being kind of pushed out, right? And so we see that if the market does soften a little bit, that there's opportunity for those, that segment of buyers that can now participate in the marketplace. And so, we're very optimistic about the next 12 to 24 months, and we're looking forward to it. And, again, I think with, working with Ad and Christie's, we see it as kind of we were always very optimistic about the next few years, but now, with all the opportunities opening up and kind of what we've been able to do as far as just opening up that part of our business, we're really excited about. So.
Well, this is great. I think, I can't imagine you not being optimistic or looking at opportunities no matter what's going on. And I think, you are it's clear why you are the Chief Experience Officer, and you've built a wonderful company with Chris. You're thoughtful, you're caring, you're empathetic. So I know we really appreciate you taking the time today to join us.
Thank you, guys. I appreciate it. It's awesome seeing you guys. And I'm very grateful for the opportunity to talk with you.
Well, on that note, Ryan, thank you so much. Thanks to all of you who tuned in this morning, and make it a great rest of the week. And we'll plan to see you next Tuesday. But until then, remember, you got this.